Hi there, this is Brad Gibble with the FX Market Insight for the 21st of September. All right, now coming into trading for the start of Friday in this Asian session. Now, just having a look at the where the currencies are. The US dollar has sort of fallen away against a number of pairs, and it's really been put down to a decrease in trade tensions. I think that's a lot of crap, but let's have a look what's going on here. The Aussie finally got above 72.40. Sort of like yesterday, the day before, but then it's slowly held onto those gains. The Kiwi, we had some strong GDP numbers, which looked like it was going to be clean out to the top side. It stalled around 66.40, but then you can see how the move yesterday in the European session, and this is all about sterling, was enough to push the currencies higher. The good thing is, if you have a look across these top four pairs, you get the Aussie, Kiwi, Euro, where's my thing? Euro and sterling. Now, one good way to gauge if the market is trading sort of what I would call normally is that these four pairs in particular are correlating. And at the moment they are, and it's really, I think dollar sterling, we had some really strong sterling numbers yesterday once again, and that was enough. I mean, it's like maybe the straw that broke the camel's back. We saw the really good inflation numbers or high inflation numbers push sterling above 132. Now, that should have probably gone to where sterling was yesterday, but then Brexit came out, showed its ugly head, and it dropped 120 points. But Brexit, geopolitical events, you don't know when they start, when they finish. That article was flushed through the market. The market was caught long. They got belted. Then the currency sort of picks itself up, starts trading sideways. The fundamentals always come back to win, okay, over these geopolitical events when they subside. And that's that Brexit article. I can feel like giving the guy a whack because I was long sterling, and unfortunately got taken out the day before. And you can see here now, once there's a little bit of traction around that same level, traders were very cautious, and then it was just enough to really send it high up towards 133 the figure. Now that's taken euro up through pretty passively up through sort of 117.15. It's now sort of trading to the top side, and dollar yen. No trade tensions. It's starting to move to the top side as well. And dollar CAD just drifting lower on that whole weaker dollar perspective and a bit of a stronger oil price. So that's where we are at the moment. Now, look at a very interesting setup with the technical side of things. I just want to run through this because actually, let me just show you what the dollar index is doing, and then I'll give you a look at the other pairs. Now, just having a look here at the dollar, it has finally succumbed to the pressure and moved down through 94.40. You can see there's a decent clean out. The swift move down suggests there was a lot of stop losses triggered, and traders are now wondering what the hell is going on, and the dollar is moved into a sort of bit of a bearish mode. Now, you got to think there's something weird going on here with China as well. Like the yuan has appreciated here. Okay, now nothing's gone away, nothing's changed. The trade tariffs are still there. The market's got itself so bearish yuan that it's just getting flushed out. But if you have a look here on the dollar yuan, and this is one of the things that the Chinese government are probably doing is messing around with their currency to screw up the markets a bit. Is around 682. We've had a couple of lows here, a couple of cracks down around this level. So really, it's still trading sideways, even though it's broken down through a support trend line. Now you can also see how nicely this pair, dollar yuan or dollar China, is actually trading technically, breaking down through that trend line, and then you see a nice swift move. You know, this thing is rocking and rolling down 200 points, and now it's starting to trade sideways. So you've got to really keep a close eye on this. But the dollar broken down. Now let's just have a look at the technical picture, because there's a couple of interesting things that are happening here. Now don't forget this the US dollar index, right? It's against a basket of currencies, and sterling is about, I think it's 12 or 13%. Euro's 57.8%. So you got about 70% of the index, okay, against euro and sterling. And sterling's gone through the roof. So of course this thing's going to come under pressure. This isn't dollar weakness, it's UK strength. So don't get confused that the dollar's getting hit because of, you know, the media are saying it's trade wars, all this sort of crap. Yeah, no, it's just because we're seeing a big turnaround in the whole Brexit picture. Sterling fundamentals are very strong. UK got to start raising interest rates very quickly to really contain inflation, because it's out of control over there at the moment. And that's going to be a bit of a major issue with the housing market and a few other things there as well. Now, just coming into the MyFX Trading Hub, what I want to do is explain a couple of things. Of course, I mean, this has been the same way, I think, at least the last 3 weeks. Geopolitics have been overshadowing the whole market, and that is the case. Now, we are seeing if I just scroll down here, we are seeing a big significant shift here on the analysis. Technically, a lot of these pairs have changed their general sentiment, and a lot of it is actually just on a technical perspective. The dollar was sitting right on a level yesterday where it was drifting lower, but it was still overall trading sideways. It's now gone down and pushed it down to a bearish mode across all charts, all time frames, I should say. And Euro's gone into a bullish mode. Sterling is still the best pair. Now, fundamentally and technically, it's going up, right? So that's the one you need to probably focus on. Aussie and Kiwi, well, they've got a different perspective. The Aussie is right on a very key level here. If it breaks through 73, the figure on the top side, it will go into a bullish perspective, because at the moment, the central bank, very mildly hawkish. They said the next move will be up. But, you know, when you look at the technicals, it's going up on the hourlies. It's right at the crossroads on the weekly and dailies. If it breaks through 73, the figure, then we could see a significant move to the top side. Once again, it's all geopolitical. You usually see these moves during central bank action. Same for dollar yen. It's at critical levels too, and it's just breaking through on the daily and weekly. So that's gone in bullish. Dollar CAD was already in a bearish mode, and dollar Swiss has turned down on all time frames as well. But just have a look at this, because the devil's in the detail. Now, if you're looking at the analysis, right, this is just a snapshot of where these currencies are. What you need to do is drill into each of these pairs and you get a better perspective of what's going on. Now, this is a way to sort of just go down through the whole analysis summary, but if you have a look here, Euro, technically it's up, and the other central bank and economic data is neutral. So, yeah, sure, it's going up. It's bullish, but on a technical perspective. Sterling, it's going up on all aspects, fundamentally and technically. It is, this was the same yesterday. And if you have a look through the FX Market Insight for yesterday, we're saying, like, sterling shouldn't be down here. It's going up, and it sure as hell did. I guess it rallied 180 points yesterday. Now, this is the interesting one. Aussie, slight central bank, top side, interest rates going up abroad, borrowing costs high. The technical outlook, if I just bring you across to the other screen here, I just want to give you a look at what I'm looking at myself. Okay, if you have a look on a technical perspective here, look at the Aussie here. Of course, it's going up on the hourlies. Look at this. This is a really gorgeous trend line, resistance trend line. And it's right at that critical level. Stochastically, it's massively overbought. This is the same on the weeklies as well. So just be very wary. The Aussie, it's only going up because of the geopolitical events and the euphoria around sterling. Okay, this US-China trade war should be really impacting it more. All of a sudden, everyone's forgotten about it. And that doesn't make sense. So something is happening behind the scenes that I'm not really getting at this point. They have raised, I know the media is sort of talking about they have raised tariffs, but it's probably not as much as everyone thought. Well, that's bullshit. Okay, there's something else going on here. Maybe the market just got itself so caught up in selling Aussie, being long US dollars, and etc., that it's just turning around on a positioning. And this is a massive squeeze. So that's where I see the Aussie at this point. Kiwi, well, this is a little bit different to the Aussie, because what we have is a situation where the central bank, okay, they're very concerned about the economy and trying to get it going. Kiwi business activity numbers next week are huge. This is the one number the RBNZ we're focusing on. If they are weak again, well, they will be looking to cut rates. But technically, it's broken higher, right? So you've got the technicals working against the fundamentals. That's why I've got it sideways. But you know what? The Kiwi will follow the Aussie, which is currently following the other pairs. And once again, as I said, I don't know if dollar China has been manipulated, but it shouldn't be stronger to me. And that is another weird one. But these current geopolitical moves are creating or pushing a lot of the technicals here into, like the dollar into a bearish sentiment. It's all geopolitical. And I've got the central bank here. Don't get confused with the Fed. Now, the Fed, the interest rate hikes for the Fed, even next week, okay, are all factored in. And in their statement last time, they were talking about moving to a neutral stance. So the market's already factored in the hikes. So the central bank, to me, it's sort of like neutral to hawkish, but this is all factored in. So maybe everything that's good about a dollar has already been factored in, and it's now broken down technically, and this is what's impacting all the other pairs. But don't forget, this is a geopolitical push. So this can change very quickly once again, and you need some more fundamentals to work this out. Bank of Japan, okay, so coming out of dollar yen, once again, it's very much the same outlook as the dollar. It's going up in the hourlies and just right now breaking through the weekly and daily charts. So technically, it's going up, and that's all she wrote there. It's once again geopolitics playing a big part. Dollar CAD technically bearish. The central bank along for the ride as well. They are saying they need to do something about interest rates. NAFTA's hanging over dollar CAD, but overall this thing is moving lower, and that fits nicely in with the stronger oil as well, which is currently the situation. And dollar Swiss, it's broken down on all time frames there as well. So once again, also bearish sentiment. But you need these puppies here, the fundamentals, to be lined up to really give you a strong trade. At the moment, a lot of these pairs are just technical pushes on geopolitics. To me, dollar CAD and sterling are the two pairs which actually have the central banks moving with that technical perspective. So they're the best ones, but you can't deny the fact that these other ones have started to move in specific directions. As I said, the geopolitical situation may change very quickly. More tariffs on China may change the picture for a lot of these pairs, and obviously NAFTA as well. And then obviously if something comes out about Brexit, well then sterling could do some somersaults. So it's pretty tricky at the moment with where we're at. But let's just focus on where we're going. That's the most important thing. And then coming up today, to finish the week, we've got German flash manufacturing numbers. We've also got the Eurozone PMI numbers there as well. So keep an eye on the euro. It is moving higher, stronger numbers. It should just keep going up. What you really want to focus on is short-term momentum. And really, the major release today is the CAD CPI. And that's going to be an important release for a number of pairs. So make sure you do tune into that. We've also got Canadian, if I just change channels here, change screens, I should say. We've also got the Canadian retail sales figures coming out as well. Now, once again, this is like two big variables. So if CPI and retail sales match up, well, then we're going to see a bigger move, consistent move. If CPI is, say, up or down and retail sales is the opposite, well, then we might just see a bit of a knee-jerk volatility. But direction is down. Strong numbers here across retail sales and CPI, and dollar CAD will move another 70 to 100 points to the downside, that's for sure. But just be aware, like sterling the other day, when we had those strong inflation numbers out of the UK, beware the geopolitical updates, especially on NAFTA, right? All right, so that's where we are, guys. It's a bit of an interesting situation right at the moment. To me, if you're looking at the overall news, I mean, you're trying to work out where the real focus is, and it's starting to drift. Equity markets seem very happy with what's going on. That's like there's no worries, nothing to see here, all this sort of stuff. It's like, to me, it's a little bit smelly. And this is where you come back to the news and have a look at the overall picture here. The news-wise, when there's nothing really coming out, they just regurgitate the same crap. Dollar dips across the board as trade war worries recede. It's like, you're just trying to make up a story that fits in with the dollar move, right? The US dollar index is lower because sterling has turned around. We've had really strong fundamentals out of sterling. And then yesterday, I mean, you'd love to give these guys a slap in the face on Brexit hopes. I mean, the day before they were talking about it was a massive problem because of the Northern Ireland border issue. Now there's Brexit hopes. The fact is, UK retail sales is through the roof. UK inflation is through the roof. They've got to raise interest rates. Sterling's going up. That's what's going on there. And dollar CAD, we've got NAFTA hanging over it. So geopolitical issue. Trump's just doing his usual crap, picking fights with whoever will bite. But we'll see more of that down the track. So that's where we are, guys. It's a little bit tricky, and it's a little bit, if anything, just a little bit pissed off that you get these articles, and you got to let the pain go, because I sort of stopped getting, what I'm trying to talk about is I stopped getting long sterling yesterday, like a lot of other traders did that I spoke to in a number of different banks. Some of my mates, we were all talking about this move on the inflation numbers. That should have been much higher. The Brexit issue flushed everyone out. Then when it gets back to that level again, everyone gets a little bit cautious and starting to read the newspapers, see if there's anything coming out. And before you know it, boom, the damn thing, no, there's no Brexit. It's all a joke, and the damn thing's where it should have been the day before. And it's like, oh, man, there's the cash. So with that, let the pain go. If you've got on that trade, well done. That's a really good trade. Fundamentally, it goes with the technical picture as well. CAD CPI, retail sales. This is what we've got to look forward to. This thing is getting pushed around by variable factors, OPEC and the price of oil, NAFTA, and then you've got the dollar situation in there as well. So it's a little bit tricky, especially when you look at dollar yen and you think, well, isn't the dollar going down? Yeah, no, it's not against dollar yen. It's going up. So you just need to understand what currency pairs are best to look at. CAD, definitely with the data coming out. Obviously, the Eurozone. I'll be looking at those pairs and just trying to work out where everything is. I think it's going to be another day or two before everyone's really comfortable to get into sterling. And if anything, they'll be looking for more negative Brexit news to get into it. All right, guys, that's it from me. Pretty interesting sort of 24 hours there. As it was, the data here really driving sterling and the US dollar. Just be aware, as I mentioned just before, the overall picture here, especially technically, when you are looking at a lot of these pairs, the picture is being driven by geopolitics. Now, the geopolitics has been enough to really push through, not only get the hourly direction, but daily charts as well. As I mentioned, you got them breaking on higher on euro, lower on the dollar, down lower through the Swiss, and up through dollar yen. All of these things geopolitical. To me, there's a very potential big move here on the Aussie. If it breaks through 73 the figure, this will be going to a bullish mode as well. Kiwi, we've got the RBNZ next week. We've got negative, dovish central bank versus strong technicals. It's a bit of a tricky trade, but that will just follow the Aussie. So make sure you keep an eye on that during that Asian session. And if anything, if you are looking for some answers, keep a very close eye on dollar yuan, right? I think the People's Bank of China and the Chinese government, they seem to think, they've been saying they're going to do some things outside the usual scope of what's going on. To me, the extra tariffs this week was a no-brainer. Okay, it's a weaker one, which we saw that. Okay, it was very short-lived. Now this thing's moving lower. I think this is just another clean out, and then we'll see this thing higher and all those other currencies correct. But all we can trade at the moment is what you can see. So just keep an eye on this thing. The market's very long. If we see a move down through 680, 6.8, then we may see a massive clean out and then a really good opportunity to get long dollar yuan. But we'll have to see how that plays out. Funnily enough, China and the US have gone very quiet. Okay, with that, the whole issue there around the trade tariffs. We'll see how that plays out over the coming days. All right, guys, that's it from me. Have a good trade day. Hopefully that gives you a lot of help with regards to the analysis, and we'll see you in the live trade zone. Cheerio.